what's up? How is everyone's doing? This is Neo. Welcome back. Hope everybody is doing wonderfully. Let's see, today we have a lot to talk about. There is a red day, super red, for the last couple of days. And let's take a look at what is going on in the stock market. Here, S&P 500 actually is up for the day, 8 points, 8.48. Wow, it went down and then went back up. Let's see. S&P 500, that includes AppLovin. We will talk about it. And wow, Palantir and Robinhood, they are all in S&P 500. Oh, not bad actually. It dipped noon. Afterwards, it went up. So some people are buying the dip. However, the short-term trend is still lower highs and lower lows. But if we zoom out for the whole year, look, since the dip in April, we have been trending up energetically. And it is about time that we should have a correction, because you know what? Stock have been trending up crazily for the last 7 months or 6 months. And a lot of stocks actually have just 5x, 6x, 10x. So some people may be, going for vacation, taking care of taxation. Some are, for whatever reason, they think, oh, the valuations have gone up too much, too fast, and this is about time to, have a little bit of correction. So stock market always finds some reasons to correct and also find some reasons to go up. So now we have trend up very kind of flawlessly, if you will, for the last 6 months since the dip in April. So I also think it is about time we have a small correction. Correction is good. Think of it as after a nice run up, give it a little bit pause and a little bit of rest. Some investors, some people might have been missing this last opportunity. During the last 6 months, they might have completely missed out of the whole opportunity. So here is a little dip to get them, to give them some reasons to get into the current uptrend. I believe the uptrend is not done yet. We are going to have some, better news from the government shutdown for sure. It will reopen for sure. And then also for the tariffs, we are still in talk with China. We are not looking for, total removal of all the tariff between the countries, but then even removing part of it, 30% of it, means a better scenario or better outcome for the markets, right? Because the market's been pricing in for the worst case scenario. And then we also have rate cuts coming. I know last week or 2 weeks ago, the Federal Reserve Bank decision was not to continue with the interest rates decrease yet for now, so there is a pause for the rate cut. So the market viewed it as, oh, the Federal Reserve Bank is slow to react again because we have continued weakness in the stock market. So now, when the Federal Reserve Bank next month in December talk about rate cut, they will most likely have a rate cut. Now, for these past couple of days, the job market numbers have been so bad that it may prompt the Federal Reserve Bank to lower interest rate not just by 25%, but maybe 50. So instead of 25, maybe just 50. So that will already give a good reason for the market to rebound strongly, okay, towards the end of the year. And also don't forget, even if we don't get a 50 base point rate cut for this time, maybe 25, next year we're gonna have another 25 base point rate cut. Okay, so and also the AI is gonna help decrease the manufacturing cost overall, and the servicing cost or service costs, if you will, for the service sector. So AI in the next few years is gonna help to improve cost structures for a lot of companies, not just manufacturing companies, but also service company as well. So, travel company, for example, Big Bear AI, they're using their biometrics in different airports, major airports, to shorten the time for people to pass through the checkpoints in various airports, right? That is just one of the examples. And you will see a lot of use cases of AI that continue to improve the productivity, of our workforce as well. So I do not worry about that. And then also let's look at, what is the headline news? Here is what Elon Musk needs to do to earn his Tesla trillion. Well, I used to be a big fan of Tesla, and I actually bought my Model X and then my Model Y Performance both for my wife. However, now Tesla, there are companies working in robotics, right? And they are already selling robots. For example, Unitree of China, UNITREE, they are already selling robots in Walmart. You can even buy them. It's $20,000 to $25,000 per robot. That includes tariffs already. Imagine when there is no tariffs, it's $10,000. Oh my God, it's crazy. Who can compete with China? Price and features. Oh man, and the AI, my God. Now, Tesla cars do not have AI voice companion yet. You talk to Alexa of Amazon. Alexa can reply you, can joke with you. You ask Google Assistant to tell you the weather, give you idea of where to eat. Google Assistant can entertain you, can give you some jokes. You talk to a Tesla car, the car would not have a nice conversation with you as if the car is another human being. No, it's not like that. There is no AI voice companion feature in any Tesla cars. So somehow AI is one of my very what should I say? I do not really recommend it very much to people because it's not making a dime in profit yet, because I mostly recommend people to buy profitable companies. However, somehow AI is similar to the beginning of Amazon. They are spending a lot to get market share first. And we will talk about somehow AI, so you will understand what I'm talking about. But for now, our focus is on today's new look. Rivian CEO. Talking about Rivian, their Q2 earning is better than expected. So compared to Tesla, the CEO always over promise and under deliver, But you have other companies such as Rivian, such as Palantir, such as AppLovin, such as SoFi Technology, such as Robinhood. These CEOs always under promise, but always over deliver. You want to choose wisely which company to invest in, not just what market they are in, but also what the team, especially the CEO, look like, their personality, whether they are, talk, no walk. You want to have the more certainty that the company deliver better results than what you expect. Those are better companies to invest in. So let's go to Reddit. So Reddit announced third quarter 2025 results. Daily active unique users, how they call them, the members, increased 19% year over year to 116 million. Revenue grew 68% year over year to 585 million, which is amazing. Gross margin expand year over year to 91%. Holy. Net income 163 million, 28% of revenue, which is wonderful. Dilute EPS of 80 cents. Wow, this company is just a money printer. Just EBITDA 236 million, 40% of revenue, which is absolutely great. Just last year, they were still losing money. Wow, turnaround story. This is one heck of a company. I hope I have the heck right. Sometimes I don't pronounce it right. Operating cash flow of 185 million. Operating cash flow is really great. It's really great. What this company could even scale up more if their international expansion will be seeing great momentum going forward. My God. Free cash flow 183 million. I mean, an improvement of 130 million from the prior year. Wow. This is a crash generator, multiplier, printer. Okay, let's see. Let me ask AI, Google AI. Reddit reports strong Q3 earnings exceed expectations, driven by significant growth in revenue, daily active unique users. The company achieved the GAAP generally accepted accounting principle profitability for the first time in the quarter. Revenue was 585 million, a 68% increase year over year, beating analysts' estimates of approximately 550 million. Net income reached 163 million, a significant turnaround from a net loss in the prior year period. Dilute EPS, earning per share, was 80 cents, substantially higher than the consensus estimate of around 50 cents per share. That is amazing. That is 60% higher than consensus estimate. Wow. Adjusted EBITDA was 236 million, 40% of margin of total revenue, and surpassing analyst estimate and achieving a key profitability goal. Advertising revenue grew 74%. This is like AppLovin. Let's see AppLovin. Do we have AppLovin here? Yes, we do. AppLovin gross margin 78%. Oh, gross margin AppLovin 78%. What about Reddit? Reddit is 90%, 91% gross margin. Yeah. Look. Guys, this is amazing business. Now, why? The higher the gross margin, the more efficient the company is using their capital in generating net profit. That is gross margin. That is what it's telling you. And wow. This is so crazy. Reddit expect 2025 revenue to be projected 1.8 billion based on forecast. The company own guidance for Q4 2025 is between 655 million and 665 million. On top of this Q3 of 585 million, indicating strong growth throughout the year. Wow, this is a really OMG. Let's see. What is the international growth rate? Oh, right here. What international growth was a key driver, with international DAU up 31%, which is faster than domestic growth in United States, which is 19% year over year. So the international is doing great, and hopefully the monetization between international and domestics will that gap will become smaller. Because what I've heard in the past was um, the monetization per user or per unique users in domestically in United States is about $9 per user per year. Internationally, it's only about $1 plus, slightly over $1 per year. So if internationally the monetization per user can be as high as $3-4, next year, for next year, then it will vastly improve the profitability of the company. Still, oh my God, this is so crazy. And they are yet to have other multiple monetization channels, because right now they are mostly focusing on just AI advertising. Oh my God. What else do we have? Let's see. What do we have here? AppLovin PS ratio is 33. Price per sale ratio. Wow, 33 to 41. My gosh. How about Reddit? Reddit price per sale ratio is only 17 to 22. So let's say 20. So AppLovin is 40. AppLovin is double. Wow. And looking at the gross profit margin, AppLovin is only around 80. Let's say 80. So this is 80. Yeah, let's say 80. And then Reddit is 91. And then how about the growth of revenue year over year for AppLovin is about 68 Q3, 68%. How about Reddit? Revenue growth Q3, where is Q3? Oh, right here is also 60%. Wow, so exciting. Why do they have to compete with each other head to head, right? 68 for AppLovin, year over year revenue growth Q3, same as Reddit. All right, guys. Oh my God, I didn't expect that. And wow, so same growth, higher gross margin for Reddit compared to AppLovin, but however, Reddit's price per sale PS ratio is only 20 versus AppLovin is 40. Wow, so if you compare the two, AppLovin is too rich in valuation. Reddit still have some way to go up. And next year, if they repeat the same 68% year over year growth of revenue, can you imagine this company could be over $300 per share next year, or even $400 per share? Oh my gosh. If they continue with the growth momentum, profitability, expanding gross profit margin still. Wow, guys. Wow. My initial thought was not as great as this, but it turns out to be much better than I thought. All right, and then yeah, let's stop here for now. And for my next video, I will talk more about the hottest company, the greatest growth company for this year. For now, because I'm feeling hungry, so let's eat dinner. Thank you for coming. Thank you for watching, guys. Have a wonderful evening. Love. Wow, amazing, amazing. My God, this company are amazing.